one, SRS. Okay, so if you're not sure whether you want to top up, or you don't know if I top up, how much tax can I save, or the ultimate test, if you feel that SRS is related to CPF, then this video is for you. Please watch it. Okay, so SRS basically three things. Number one is retirement, number two is tax relief, and number three, investment. So we say retirement first because SRS, even though we hear that, okay, SRS is tax relief, but then SRS itself, it stands for Supplementary Retirement Scheme. So it's for retirement. Like the government wants us to save for our retirement so much that they are literally willing to collect less tax. So you see, the ultimate goal is retirement. It's just that 顺便, while you're at it, then you get a bit more tax relief. So tax relief is kind of like the reward you get for saving for your retirement. Alright, so then how is that gonna work? So SRS, basically think of it as your retirement savings account. And it actually is a savings account. So it's a bank account that you open with any of the local banks, DBS, OCBC, UOB. And then not sponsored, but then DBS so far, from what I've seen, it's been the most straightforward and the most immediate. So DBS iBanking takes like 2 minutes. Yeah, okay, so anyway, once you have this SRS account open, you can put in money inside. Okay, then this money that you put inside, number one, it will be saved for your retirement. And number two, you get a dollar-to-dollar tax relief on it. Okay, however, there is a maximum yearly limit that you can put inside. So for Singaporeans and PRs, so max per year for Singaporeans and PR, $15,300. Or for foreigners, that is $35,700 yearly limit. Alright, so then if you, let's say Singaporean, and you top up the maximum of 15,300 into your SRS, then this 15,300 will be saved for your retirement, and your chargeable income reduces by 15,300. So let's say if initially your chargeable income was 150, then you top up 15,300, chargeable income drops to 134.7k. 150k, 134.7k. So now you will pay tax based on this instead. So what exactly does that mean for you in terms of tax savings? Okay, so let's say initially if you did not do the SRS, so no SRS, then your chargeable income is 150, right? 100 chargeable income basically means that after we already deduct all of the tax relief, the donations, the deductions and everything, you are taxed based on 150k. So 150k, in this case, your tax payable is, so if we look at the tax bracket, first 120k, you pay 7,950. And then anything within the next 40k, you pay 15%. So you are in the 15% tax bracket. In this case, we take 30k times 15, you pay 4,005. So 4,005 plus 7,950, you pay 12,450 in tax. Okay, but then what if you do your SRS? So you put in this 15,300. Now we take this as your chargeable income. In that case then, so with SRS, 134.7k, then you'll see that your chargeable income, so same thing, 7,950 for the first 120, and then in the 15% tax bracket is only $14,700. So in that case, you pay tax based on 2,250 if we times 15%. So that immediately drops to 10,155. So it's more than 2,000 in tax savings once you top up to your SRS. Okay, so if you really calculate, you take this initial minus this, you get 2,295. So this would be your tax savings. But then actually a faster way to calculate how much tax you save, you just take this 15.3k times the tax bracket that you're in, which in this case would be 15%. So you take this times 15%, you still get 2,295. So this is especially fast if this entire thing is in the same tax bracket. Okay, and then one more thing is that as you go towards a higher tax bracket, you will see that the absolute amount of tax that you saved by contributing to SRS is more. So for instance, if we are in maybe the 20% tax bracket, so we take the same 15.3k contribution times 20%. So if 20%, then, okay, if I'm in the 20% tax bracket, I would save $3060, $3,060. Okay, so you will see that actually this compared to the actual amount of tax that you pay, especially in the 20% tax bracket, is not too significant. But at the same time, usually if this is money that you don't need anyway, you're gonna save for retirement anyway, might as well get the 3K tax savings. Okay, so that's good for people in the higher tax bracket. Then for the lower tax bracket, let's say if we are in the 7% tax bracket, then you would see that the absolute amount of tax that you save will be lesser. For instance, 15.3K, if we times 7%, that is 1071. So $1,071 in tax saved. However, because you're in the lower tax bracket, you will see that the percentage of tax that you save is actually pretty significant. So let's say if maybe we earn 80K in chargeable income, then before the SRS, you would actually pay 3350. So if no SRS, you would pay 3350. So you see the percentage. If I take 1071 divided by 3350 times 100%, that is actually, you save, no, this shouldn't be dollar sign. You save 31.97%. So that's 1/3 of tax saved. Alright, but then as much as this is very attractive, all of the tax savings, however, do also consider your cash flow and your financial circumstances, whether it really makes sense to top up to the SRS or not. So in that area, if you need any discussion, if you need financial review or any planning, you can always just discuss with me directly. Okay, and then one more thing is, if you don't know what your chargeable income is, the best gauge is actually to go into your IRAS and then take a look at your notice of assessment. Okay, so I will link this here. Then basically the notice of assessment, you will see it very clearly on the right side. So chargeable income, then how much? So especially if your employment income is relatively stable, you can use that as a good gauge. Okay, then before we move on to the next one, which is interest and investments in SRS, there are two frequently asked questions. So number one is, do I have to top up to the SRS every single year? No. So there is no obligation or commitment to top up to SRS every single year. It's just that if you top up that year, then you get tax relief for that year. If you don't top up the next year, then you don't get tax relief for the next year. So it's very simple. It's pretty flexible on your end. Okay, then second FAQ is, if I top up now, let's say in February 2026, then by April 2026 tax bill, will I already have the tax savings? No. So SRS is very similar to your CPF contributions. And basically, if you top up this year, only next year, 2027 tax bill will reflect the tax savings. So it's not like you top up now, then April you already get tax savings. Okay, and then this part, or this video generally is more like the roles and what SRS is. For the strategies and how to really use SRS, do subscribe because there will be a series of videos after this. Okay, now then what happens inside your SRS? Does it get 2.5% or 4% like your CPF? No. So this is the part where we clarify that SRS is totally different and separate from CPF. The interest from CPF is just CPF. SRS, if you don't do anything, you get 0.05%. So most of the time, people would want to invest that or put it into something that gives a higher yield, even if it's savings. Yeah, so if not, then it will be 0.05. Then generally, what can you invest in? So typically, local stocks or anything basically listed on SGX. So your REITs and your ETFs listed there, generally all okay. And then the Singapore government securities like your T-bills, SSB, SGS bonds, fixed deposits are also okay. Certain robo-advisors like Endawas or Stashaway is also okay. And then annuities that give you like monthly payment in retirement, something similar to your CPF also can. And also unit trusts and mutual funds like your SM1 is also okay. Yeah, if not, then it's only 0.05% inside. Okay, then what about withdrawals? The most important part, when can I get my money? What are the rules? What are the limits? So first thing to know is your statutory retirement age is very important. Retirement age. So this is the age whereby you can withdraw without any penalties. And it depends on the year that you open the account. So let's say you open it now, whereby the retirement age is 63, then you can withdraw at 63. But then no worries, it will be locked at 63. So afterwards, you know that in July, it will switch to 64, right? It will increase by 1 year, but it will not affect you. As long as you open now, it will be locked at the statutory retirement age on the year that you open the account. It will be locked. Okay, and then also for the SRS, no worries, there is actually no deadline. So let's say maybe you hit 63 already, but you're still working, you feel like, actually, you know what, I don't really need the SRS, I don't need to withdraw right now, then suit yourself, you can just leave it inside. So there is no deadline or maximum age whereby you have to start withdrawing for the SRS. But then the moment you start, there are a few things that you have to take note of. First thing is, SRS is a one-way thing. Okay, so one way. Meaning, the moment that you start withdrawing, you cannot use the SRS for tax relief anymore. So the moment that it goes out of the SRS, you can no longer put in the SRS. You can no longer top up for tax relief. So if, let's say, you've already hit this age but you're still working, the tax relief is still significant for you, best not to start. And it makes sense because it's only when you don't really have an income whereby you need to withdraw from the SRS. Yeah, but then this is really important to say because sometimes when we hit the retirement age, they're like, oh, my money is free, let me take everything out. But little did they know that, oh, once I take out, I cannot use it for tax relief anymore. So that's one thing that is super important to know. So rule number one, it's one way. Okay, then rule number two is once you start, so although there's no deadline to start, but once you start, there is a timer of 10 years. Okay. 10 years. What does this mean? It means that the moment you start withdrawing, you have 10 years to empty out your SRS. Okay, then a lot of questions. What if I don't withdraw within the 10 years? Then what happens to my money? Where does it go? Okay, then for this part, we will go to rule number 3 first, and then you will understand. Okay, rule number 3 is once you start withdrawing, whatever that you withdraw that year, 50% will be taxed, or half will be taxed. Half of whatever that you withdraw that year will be taxed. Okay, so this one, especially, it may be a bit confusing, especially for people who are not so familiar with the jargon. But when they say 50% is tax, it doesn't mean that the government or IRS will take away 50% from you. It just means that, let's say, if you withdraw maybe, if you withdraw 40K, then 20K will not be taxed. The other 20K will be taxed. Then this one, they will look at your tax brackets to determine how much tax you have to pay. So it's not saying that this entire thing will be tax, will be like tax given to the government. Yeah, so maybe you think that, oh, when I withdraw, I don't have to pay any tax at all. No, you do. So half of it, you still do have to pay tax. And this is on top of the income that you are earning that year. So let's say if that year you are earning maybe 100K in chargeable income, plus you take out 40K from the SRS. In that case then, this 20K will add to your 100K. Then you will be taxed based on a 120K chargeable income. So that's how it works. SRS, just think of it as literally employment income. Okay, and then the last big rule, if you want to withdraw early. So what if I haven't hit 63 but I want to withdraw money from the SRS? Then there will be a penalty. So in that case, rule number 4, for any early withdrawals, number 1, instead of half tax, it will be full tax. So 100% will be taxed. So full tax plus there is an additional 5% penalty on the amount that you are withdrawing. Okay, so 5% penalty. Okay, so this is the last rule that you will need to know. Yeah, so naturally many people feel like, oh, then it's so disadvantageous for me. Why so many limits, so many benefits? But then actually many people who know how to use the rules smartly can circumvent things like the penalty and then do a good withdrawal strategy to really optimize their tax savings. Yeah, so then again, the rules are really just rules. It's the way that you use it to really benefit yourself. Okay, so after this video, because this video is mostly just the rules, right? So then we'll talk about the strategies and then how can you really do it? What are the ways to look at the SRS to optimize it? So that will be in level 2, 3 and master level. So do follow along and subscribe.